and go to chapter 1. And then exercise and solve some problems that I think it might be in your homework problems. And here is the exercises. Okay, so in your homework problem, probably for chapter 1, you might have a question from exercise 2. It says the PC Works assembles custom computers from components supplied by various manufacturers. The company is very small, and its assembly shop and retail sales store are housed in the single facility in Redmond, Washington. Listed below are some of the costs that the company incurs required. For each cost, indicate whether it would most likely be classified as direct material, direct labor, manufacturing overhead, selling, or an administrative cost. Before I do this and show you the answers, I would like to show you something that I wrote on a paper, and I want you to focus on this very carefully, because this is kind of reminding you about Accounting 101 and kind of reminds you that what you are exactly trying to learn in this book. And that way I can put you in the right direction and right focus on the materials that I'm trying to teach in this book, okay? So before that, I'm gonna stop sharing for a second. You should see it now, okay? Now, as you see here, it says this is an income statement. So the company name is at the top, income statement for the year ending December 31st, let's say 2020. So you learned this already in financial accounting. You learned also the income statement has revenues at the top, which is net sales. And let's say in this example, $10,000, right? And in financial accounting 101, they told you that the cost of goods sold is $4,000. And by knowing that, you were easily able to make this financial statement saying, okay, net sales is 10,000, cost of goods sold is given $4,000, and then gross profit is 6,000. That's why we have a gross profit of 6,000. Now, my question is, how do you know the cost of goods sold is 4,000? Let's say this is a manufacturing company. It is given to you that cost of goods sold is 4,000, but in managerial accounting, it's not given to you. It's your job to calculate that 4,000 yourself. So here is the difference, because in financial accounting 101, they gave you the $4,000, but now I'm asking you to calculate it in managerial accounting 102. That $4,000. So what is that $4,000 coming from? Okay, so a cost of goods sold for a manufacturing company, the $4,000 is coming from direct materials, the material that you use in your manufacturing, the direct labor, the labor that directly touch those production direct materials to create that final product. So that's the direct labor. But besides that, you have also manufacturing overhead, which is, imagine, where do you want these materials, direct materials and direct labor to work? It should be placed, right? So manufacturing overhead is your factory rent, factory utility expense, factory equipment depreciation expense, factory insurance expense, factory direct factory indirect labor expense, right? Wage expense, indirect labor, Direct labor is here, but indirect labor is in manufacturing overhead. The factory has also a manager. So the factory manager salary is in here. So anything related to overall factory goes into manufacturing overhead. So if you combine your direct material that you use in your production, the direct labor, the person who is making the material to the final product, and the manufacturing overhead combined will be that cost of goods sold. Now, just so you know, if you make a product, then you need material. If you make a product, then you need direct labor. That means if you do not make any product, you will not spend any money for direct material, any money for direct labor. Agree? So direct material and direct labor is a variable expense. Variable expense, that means if you do it, it will happen. If you don't produce anything, then it will not happen. So it's variable. Depends how many, let's say you are making t-shirts. How many t-shirts you want to make, then your material, direct material and direct labor will be a variable cost based on number of t-shirts that you are making. In regards to manufacturing overhead, your so-called manufacturing overhead cost might be fixed, like factory rent, like factory equipment depreciation, like factory manager salary, right? Those might be fixed. But there are some things that might not be fixed, might be variable. So manufacturing overhead might be fixed or might be variable. Direct material and direct labor is always variable. But manufacturing overhead, let's say you don't make any t-shirt. Guess what? You have to pay factory rent. You have to depreciate your factory equipment. You have to pay the manager's salary. So those are things that it's going to be fixed. But there are some stuff like variable. For example, what? Let's say supplies. If you don't produce anything, you're not going to use grease or cleaning materials or toilet paper or utility like electricity or water that much. So those type of things might be a variable expenses that if you don't produce anything, then will be much lower. If you start producing more, it will be much higher. So those are variable expenses. So I want you to know what is in the cost of goods sold. I want you to know what is variable and what is fixed in those three items that I just explained. So far, so good. Now, focus on this, please. We have, you might have heard this. You said freight in. What is freight in? Freight in is the cost of shipping that you pay in order to buy direct material, right? So when you buy direct material, the cost of shipping is freight in if you pay for it. If the cost of shipping is paid by sellers, then don't worry about it. You just don't have freight in. But the moment you pay for shipping, then that part of freight in it will be added to the direct material cost. But I want you to understand that there is a freight out. Another word, freight out. So what is freight out? Freight out has absolutely nothing to do with freight in. Totally different category, and it has nothing to do anything with the things that I just covered in here. So freight out, what is it? Freight out is part of operating expenses. Operating expenses, as you learned in Accounting 101, has two parts: selling expenses and general administrative expenses. Selling expenses are like advertisement expense, commission expense, showroom rent expense. General administrative expenses are like office expense, office insurance expense, office utility expense, office salary expense. Those are general administrative expenses. So operating expenses has two categories. Freight out is part of selling expense. Why? Because if you sell a t-shirt, let's say on Amazon, when you manufacture that t-shirt that you need to pay for the shipping and send it to your buyer, that's a shipping cost, which we call it freight out. Freight out is one of selling expenses, just like advertisement expense, just like showroom rent expense. So you have also freight out expense. Now, the selling expense or general administrative expense in general might be fixed, some of them, like showroom rent, right? Might be variable, some of them, like commission. So if you sell more, commission expense will be higher. If you sell less, commission that you pay to your salespeople will be less. Same thing on general administrative expense. Some portion might be fixed, some portion might be variable. So again, whatever it might be. So I just want you to understand that selling and general administrative expense is either fixed or variable, either fixed or variable. Now, the other thing that it's here, I like to learn, these items that you have at the top, like direct material, direct labor, manufacturing overhead, those are product cost, because you are producing something and goes into your product cost. But we have also period cost. Period cost, it's something that happens every period, no matter what. So if you produce nothing, your product cost will be close to zero, right? If you produce nothing. But if you produce nothing, your period cost normally happens every period. So period cost is your selling part of operating expenses, which is including selling expense and general administrative expense. So anyway, so here is the revenue minus cost of goods sold gives you gross profit. You learned that already in Accounting 101. Gross profit minus selling expenses, operating expenses, and general administrative expenses combined 33,500 will give you income from operation of 3,500. So 6,000 minus 1,000 minus 1,500 gives you income from operation of 3,500. Now, if you go a little bit lower, you will see that income from operation is 35, but we have other revenues and gains and other expense and losses. You learned this in Accounting 101. So $500 for other revenue and gains, like interest expense, interest income, gain on sale of equipment, loss on sale of equipment. Those are other stuff that might happen. It has nothing to do with your operation. That's why it goes below income from operation, and it will be considered as other gain or losses. So 3,500 plus 500 minus 300, that gives you 3,700 income before tax. And then you have income tax expense of $400. Then that gives you net income, double line, dollar sign. So in overall, you learned this in Financial Accounting 101, but I just mentioned a lot of details in here that you never had any exposure to that in previous course. So far, so good? Okay. So I'm sharing my screen now again. And here is the exercise 2. And it says, tell us which one is direct material, direct labor, manufacturing overhead, selling, or administrative costs. So I have the answers here for you. Let's see if I can find them. Right there. So the cost of hard drive installed in a computer, that's a direct material because it's used in the production. The cost of advertising in the newspaper, that's a advertising expense. That's part of operating expense. That's a selling expense. Got it? Wage of employees who assemble computers from components. That's a direct labor. direct labor right there, because they touch and make the computers. Sales commission paid to companies' salespeople, that's part of operating expense / selling expense. Operating expense, as you remember, I said there are two categories: selling expense and general administrative. So sales commission is selling expense. The salary of the assembly shop's supervisor, and that's what I mentioned already, that's a manufacturing overhead. The salary of company's accountant, that is general administrative expense, salary expense for office, general administrative expense. Depreciation on the equipment used to test assembled computers in the factory before release to customers, manufacturing overhead. So any equipment in the factory, you don't call it depreciation expense. You put it under a T account called manufacturing overhead. If you have depreciation expense on your office equipment, that will be operating expense / general administrative expense. But equipment depreciation in the factory goes under manufacturing overhead. Rent on the facility in the industrial park, a combination of manufacturing overhead because it's a portion factory, a portion is for the selling department, and a portion is for administrative. So the rent on the facility, if everything is under the same facility, then will be divided between manufacturing overhead, selling activity expenses, and administrative expenses based on, let's say, square footage. Okay, that was a good one. Number 3, again, it's part of your homework. It says, here is the question. It says, classify the cost as product or period cost, and then here is the things that you need to classify. And we just covered that. I talked about it, so let's do it. So here is depreciation on salesperson car. Salesperson car is part of operating expense / selling expense, so it is a period cost. Rent on equipment used in the factory, so that's a rent expense for the equipment used in the factory. That's a product cost. Overhead, manufacturing overhead, product cost. Lubricants used for machine maintenance, that's manufacturing overhead, product cost. Salaries of personnel who work in the finished goods warehouse. Finished goods warehouse, that means those are people who are trying to sell the item. Finished goods goes to the, it's other factory already. So it's inventory that the salespeople needs to maintain in order to sell it as soon as possible. So that's period cost. Soap and paper towel used by factory workers at end of shift. That is manufacturing overhead. That's a product cost. Manufacturing overhead, product cost. Factory supervisors' salaries. Factory supervisor is manufacturing overhead, product cost. Heat, water, and power consumed by factory or in the factory, that's manufacturing overhead, product cost. Material used for, material used for boxing products for shipment overseas. Units are not normally boxed. The normal box will be part of manufacturing overhead, because when you produce something, normally you need to put it in a box and have it ready for sales. But if it is an extra box that you need to use in order to send it overseas, that extra box is part of freight cost. Remember, if you spend money to ship your final product to someone, including the box, that will be freight cost. The box will be part of selling expense, supplies, or you can even, yeah, or you can add it to the freight cost. Yeah, and that's a period cost. Advertisement expense is operating expense / selling expense, and that's a period cost. Workers' compensation insurance for factories, for factory employees. Factory employees, so that's manufacturing overhead, and that's a product cost. If it says workers' compensation insurance for let's say office employees, then it will be operating expense / general administrative expense. Depreciation on chairs and tables in the factory lunchroom, that is manufacturing overhead. So we don't have depreciation expense for furniture in the factory. We call it, we categorize it under manufacturing overhead. But if it says depreciation on chairs and tables in the office, then it will be operating expense / general administrative expense under category of depreciation expense. The wage of the receptionist in the administrative office, that is selling operating expense / general administrative expense / period cost. Cost of leasing the corporate jet used by companies' executives, that is operating expense - general administrative expense / period cost, right there. The cost of renting room at Florida Resort for the annual sales conference, that is sales conference. So that is operating expense - selling expense and period cost. The cost of packaging the company's product. You see, that's the package of product itself when you are producing it, and you need to package it no matter what. So that's part of manufacturing overhead, and it's a product cost. Cool. Okay, so hopefully you like this. Read the rest of the chapter, obviously. Do the problems. There are a few problems for chapter 1 that you need to do in Connect on a weekly basis. Then take the quiz and do also those Learn Smart and interactive video that you need to answer a few questions. I have also office hours if you like to use it, or email it if you have any questions, okay?